maybe some short introduction from your side. I read your biography on LinkedIn,
Okay.
just to know that how is your background. But it will be nice if you tell a little bit for yourself about your experience before going to Bondora and after going to Bondora, and then start with some practical questions that I think will be interesting for investors.
Okay, sure. And maybe at the end I could ask you some questions as well, if that's okay.
Sure, for sure.
Makes it more interesting then. So yeah, hi, my name is Matt Clannachan. I lead the investor product at Bondora. I've been working at Bondora for a few years now. Before that, I was working for a couple of banks in the UK, mainly related to mortgages, but decided to make the move over to Estonia, work for Bondora in the most exciting industry in the world, which is fintech. And yeah, so I'm happy to be here today and to talk to you a bit about the questions related to recent events or anything else that I can shed some light on for you and your community.
Okay, thanks. And maybe let's start with the questions currently. It looks like that currently we are in the perfect storm for P2P investing, maybe since its inception. And it started with some collapses like Envestio and Kuetzal that turns out to be scam at the end of the year, then the coronavirus strike. And currently it's the most important topic all over the world, this coronavirus, and maybe the biggest influential in the world. I mean, it will influence a lot of things, but for me it's interesting to talk about mostly about your Go&Grow product, because it's very popular product. It's actually the reason that I started my P2P blog.
Okay.
Before that, I invested in some platforms, including Bondora Portfolio Pro, but never think about start blogging. But after the Goinggrow came up, I started, and it's actually the first article that I ever published on the P2P.
Really interesting.
Was for the Goinggrow, and it's really the most popular product, but there is some thing that investors take liquidity for granted. Currently, liquidity in the times of crisis, I know that's valid for all investments, turns out to be very big luxury and not granted. And they are now trying to do withdrawals. I think a lot of them try, as I learned some groups and speak with the investors. Can you explain how currently the liquidity of Goinggrow is and how the withdrawals are requested? Because a lot of people was thinking that there are no any liquidity at all. Actually, it looks like there is some. I tried myself also, just for trial, but it will be nice to explain how this is proceed now. I mean, the Go&Grow withdrawals.
For sure, yeah. So since we created Goinggrow in the beginning, we had a built-in feature called partial payouts. Now, we've never had to use this before the past month, but the purpose for having it was for a situation where withdrawals would exceed anything which had been a normal amount which we'd experienced so far. So over the past month, due to recent global events, as you know, we've had a much larger amount of withdrawals than we'd ever experienced before. So this is not something that we have put into place because of the events of the past month. It's always been there. It's not something that's in place because of the performance of the portfolio. It's simply due to high amounts of withdrawals from investors. And the reason that we made it in place is to protect the net return of up to 6.75% for investors. Because if we allowed just unlimited withdrawals within the Go&Grow portfolio, it may be more difficult to then achieve that return of up to 6.75%, because you have in the underlying portfolio of Go&Grow, you have over 100,000 loans in the portfolio, which is generating a cash flow every single day. So for us to continue to protect that return for investors, because not everybody wants to withdraw, right? So for the ones especially that don't want to withdraw, we don't want to then destroy their return as well. So that's why we always had it in place from the beginning, and that's why it's been activated recently, because of the higher withdrawals. We've seen since the peak which was around in mid-March or around the third week of March, that withdrawals are decreasing by around 50% per week, maybe even more now. So we can see that there was a peak and they are decreasing, but at the moment the partial payouts are still in place. And as I said, it's to protect the net return for investors. Specifically how it works, if there is not enough liquidity for you to make a full withdrawal for your requested amount, a partial amount will be sent to your bank account, and the remaining amounts will be paid to your Bondora main account every single banking day. And that's until the full amount that you requested is completed. So you will receive that partial payout once per day, and it's as a percentage of the outstanding withdrawal amount. So the percentage amount is the same for all investors, and that's how it works.
Okay, thank you. This is very good to know. And I also want to ask, is there any minimum that you can withdraw from the Bondora main account? I saw that there is no taxes at all. Should be some minimal amount that you can request for bank transfer, I mean.
There's no minimum amount. So if you want to withdraw from your main account to your bank account, there's no minimum withdrawal.
Okay. And no any other taxes and things like that?
No, there is the only fee which has always been there is the €1 withdrawal fee.
Yeah, but it's on the total amount, not the partial.
It's on the total amount, yeah. So we're not going to charge you a withdrawal fee for every partial payout that comes out. It's one.
You don't charge anything for bank transfers?
No.
Is it okay for the platform?
Well, yeah, bank transfers are basically free.
Okay.
The biggest cost from a platform perspective is for kind of credit card payments, because those transactions cost more. But through SEPA instant payments, it's quite cost effective anyway. So
yeah, I know it is, but Bulgarian banks used to charge several euro for a single transfer. So it's okay. It's nice for you. Okay, let's go to the reserve fund about this Go&Grow. It is not intended for liquidity, for my understanding, but I want to really hear your opinion on this. It is intended to compensate if the real return rate on the portfolio going below the target rate of 6.75%. Is that right? And
yeah, that's exactly correct. So the reserve fund is purely to protect the return of up to 6.75%. It's not for additional liquidity purposes. We have a cash reserve in place, which we've always kind of had in place for the liquidity. And obviously, because that has depleted because of higher withdrawals, that's why we have partial payouts, as we said. But the reserve fund is totally different to that. In the live Q&A, which I did with Kuetzal the other day, I don't know if you saw it, our CEO, he mentioned that the reserve fund, the amount in there alone is enough to pay the returns of up to 6.75% for another year. This isn't taking into account any new originations, not taking into account any of the daily cash flow which comes in through the over 100,000 loans in the portfolio. So in reality, it's much longer than that, but that's just to give an indication of what's in the reserve fund.
But let's say in the worst case scenario that you have no any returns for the next year and no any new originations, you will manage to keep this return of 6.7 with the current size of the reserve fund.
Yes.
Okay, that's great. Yeah. It's good to know. Yeah. Okay. Maybe we should talk about the default rate you expect. Do you have some models, some forecasting models, expectations how the default rate will? I expect some spike in the default rate, probably you too, but how bad this will be? What is your expectations for this? I know it's hard to make a forecast, especially for the future, but in any case, you have some models that probably run inside. And I'm interested in the worst case scenario, because best case is always the good thing, but I prefer to be prepared for the worst case scenario and expect, please share your expectations for the worst case scenario and portfolio quality on Bondora.
Yeah, so the first thing is that defaults and risks are kind of two different things. So there's always defaults in the portfolio, right? But it's expected. And how our credit model works in the background, every single month we update it based on the transactional data which we've received from the previous month. So every single transaction, every single payment, every single loan that is issued, every customer, those interactions are tracked and recorded for our credit model. And that's used to build the updated version every month. So we will use the data that we've received over the past month to then assess going forward from there. Regarding default rates specifically, we haven't seen any spike or any kind of changes in the default rate so far. This isn't just defaults, but also overdue payments as well. We looked at these specifically last week as well. There's been no changes in those, but you can say minimal changes because they're never exactly the same every month. But they're still within the risk parameters which we expect. So I think common misconception is that when something like this happens, nobody can pay anything. Everyone loses their jobs. No one can pay anything, right? When in reality, it's not like that. If you look at consumer loans in the financial crisis of 2008, they actually performed quite well compared to real estate, for example. Yeah. So yeah, it's hard to say like exactly what will happen in the coming months, but we have planned for that and we're constantly assessing that. So this isn't something new to us as well. We've been around for over a decade and we've been doing this for over a decade. So this model has a lot of data in it, which is actually proprietary to Bondora. It's exclusive to us and something that we've collected ourselves. So we're very confident in being able to manage that risk going forward as well.
Okay. And maybe there will be some new products and features for investors in the near future. Do we have any plans to introduce new products or to retire the products? I especially thinking about portfolio manager because it's for me it's not. I don't like this product personally. I think that if you're a skilled investor, you should go better with Portfolio Pro, and if you're casual investor, let's say, Bondora Go&Grow is better. And the balance between them, I don't really think has some. It's my vision. Maybe I want to hear your vision about any changes in the product portfolio of Bondora, if you plan this or not.
I mean, what we've planned, especially over the past few years, we've tried to create Bondora as a platform, which means that anyone can go there and invest, right? So dependent on if you're a casual investor, like you said, you just want to put your money in, get the net return and rely on that. You don't want to do any manual intervention. You can do that. But then on the other end of the spectrum as well, we still have the API, which investors can invest through. Yeah. This accounts for a really small amount of our monthly deposits. It's less than 1%, less than 0.5%. But we still have it active because we've tried to make it that it's a platform for everyone. No one has the exact same investment strategy. So we don't have any plans to retire any products at this point. There are definitely some products which are much more popular than others. And we don't have any plans to release any new products because one of our main focuses for this year is to continue to deliver on the promises which we've set forward for the products which we have. So I think it will have a great impact and really build investor trust and confidence to say that after this is over, we say, hey, we've delivered on exactly what we said we would over that period of a global crisis. Because it's something that we're always asked. We're always, what if this happens? How will Bondora cope with that? So it's quite exciting for us in a way to be able to deliver on that and focus on that track record still.
Okay. So no any changes in the product portfolio, which is good. If something is not broken.
No, I mean, constant improvements will be updated, but we don't have any plans to introduce something new right now.
Okay. And how the current economic situation affected future Bondora plans? I presume you have a lot of expansion plans. How this changed now? And do you focus on expansion, on cutting the cost? And especially I'm interested about how big is your burn rate and how long you will be viable as a company, which is much more important for a lot of investors, it's really important because, okay, the portfolio quality is very important, but someone has to deal with this portfolio quality. And if the company is not solvent, this will be a very big problem for investors. What is your numbers in this? How big is the team in Bondora? I never saw such information.
We have around 70 people.
70?
Yeah, I think it's 73, I think.
Okay.
So,
I mean, not too big.
No, it's not too big. And it's probably most relevant to talk about that at this time, because we haven't got a huge team of people. And mainly because a lot of the processes that we have, 99% of them are automated. So anything that can be automated is automated. So we don't have people kind of working on any manual tasks. And the reason for that is then we only hire specialists in the field. So quite often these are people who are multidisciplinary as well. So they're working on different product areas or different business areas. And what that means is that the revenue per head is actually quite high. And we haven't had to, and we have no plans to make any layoffs with this recent crisis, which is I think a great point for Bondora, because everyone's set up to work from home. There's no one who kind of has to go out into the field and have meetings in person or make sales, that kind of thing. There's no role like that. Everything can be done from our office. It doesn't matter what country in Europe it's in. So we're fully optimized to work remotely, and we don't have to make any layoffs as a result of that. So yeah, we're actually still hiring at the moment as well. So yeah, so we don't have a massive team, but we have a very powerful team for what they do. But regarding the burn rate, we don't have a burn rate because we're not losing money. We've been profitable for since 2017. So regarding our costs, yes, our revenue will be lower this year. Our profitability will be lower this year. But our variable costs, our operating costs have dropped dramatically as well over the past month. Because if you've ever been on YouTube, you've probably seen a Bondora advertisement, right?
Yeah, I see.
We have a lot of
them.
yeah, exactly. So we have a lot of advertising online, on TV. We have one of our biggest sources of customer acquisition is via referrals. So we have lower amounts of that at the moment as well. So our marketing costs have significantly decreased at the moment, which means that it's not like we don't have to make a huge growth in revenue and profit each year to sustain the business, because we're not loss making. Many of the famous fintech platforms in Europe are hemorrhaging huge amounts of money every year and have to either raise money or have significant amounts of growth to be able to sustain that. We don't. So it's kind of infinite in the way that we can just continue. We don't have to make a huge amount of profit each year. Saying that, it's likely that we will still end the year on a profit for 2020.
Okay, so I heard this from your CEO that the plans has to stay profitable, but I was curious to say if you're cutting costs, and which cost will be this? And you said that it's mainly marketing costs, so you don't do such aggressive expansion, and maybe this BMW campaign came in the worst possible moment, because there are a lot of jokes about investors currently that if they can't withdraw their money, they will at least have a chance to drive a BMW.
Okay.
I know that you are not in the marketing. I was thinking, do you think this campaign is good currently or not? How is your feeling about the BMW campaign?
Yeah, I mean, we've had pretty good feedback about it from investors. I don't know if that's what you've heard, maybe not, but from investors, they seem to be quite engaged with this campaign. So yeah, and it's something quite different, because we've done before cash prizes and other merchandise, this kind of thing. So it was something different. And if we're talking about costs again, like the cost of that for a 3-month campaign is way lower than like anything that we used to as well. Like I said, with TV marketing, we're doing TV advertising in Germany. We've done it in Estonia. We haven't planned for other countries as well. So it's a huge reduction in marketing costs.
Okay, it's good to hear this. I was thinking more about security. You say the platform is very automated. I really like it. I know it for quite a few years, maybe 4, maybe. Still investing in this platform and have no plans. It's actually the biggest share of my investment portfolio, PTP wise, not the whole investment portfolio. But I was thinking how secure is the platform. As far as I know, you have ISO security standards in place, 27K, and also 9K standard. Is this so? Is this certificate still active?
Yeah, we've always been like prepared for any of these kind of scenarios. So I think there's more opportunists in these kind of crisis environments because they think that, you know, platforms can't handle, you know, things at the moment. They can't, like the thing with Zoom recently. You know, they think that platforms can't handle like huge increase of growth, or, you know, people aren't set up to manage these things. But it's very much business as usual from our side. We have all the same processes in place. We don't have to stop anything. So yeah, it's very much business as usual.
Okay, that's good to see. Okay, one more thing. I heard that some platforms like Mintos will trying to get some licensing from less investment firm and also electronic money institution. Do you have plans to get some licenses for investor protection? I know you have licenses to issue credits in the countries that you issue these loans, but I was thinking some kind of license that will increase the confidence of investors in the platform. Do you have plans in this area?
We have no plans to do that. I would say that we've always supported and still support an EU-wide regulation for P2P lending as well. We were always working with regulators if that was to come into place. And I think that is more of a confidence for investors. I don't know if it would dramatically increase the confidence if it was an investment firm license or something else. But for us, we're always been a supporter of an EU regulation for P2P lending. Maybe it will come in the next 12 months or 24 months after recent events. But also, I think the main things from our perspective and our experience, which give investors confidence, is the public data. I think that's a massive thing that investors like to see, that all data and all transactions are public, that you're audited independently and externally from the business, and that you have a track record as well.
Sure. It's a very big plus that lacks most platforms lacking, because you're longer than 10 years on this market. So it's really nice to see this. And you plan only to cope with the government regulations for P2P, not any additional regulations like maybe electronic money institutions or things like that. Okay, that's clear for me. There are some ideas in investor groups and talkings about this lately. Do you expect to form provoke some alliances between P2P platform for better communication, better transparency, and set some, let's say, kind of industry standard for this? Do you expect to be, let's say, driving force for such alliances, or do you not have such plans?
Do you mean to combat kind of these kind of panic environments and large withdrawal environments, or what do you mean for?
No. I mean, make a platform alliance, which is not just a label that you can pay some monthly tax and say, I'm a part of this alliance, but some real alliance that will establish some, let's say, standards for the platform that will be part of this alliance, and maybe some peer reviews or some things like that.
Yeah, I guess we've never really thought about that, to be honest. But
it's a relatively new idea.
Yeah, I don't know how effective it would be either, because if you're comparing kind of platforms just within P2P, they're very different. They're totally different businesses. Yeah, totally. You know, in terms of business models, in terms of the underlying assets. So it may not be totally reflective, and you would have to kind of dedicate your time to ensure that other platforms are at a certain standard, you know, and if there's a lot of them out there which are emerging and new, it may take away your time in focusing on your own customers and your own investors. But the caveat to that and the opposite to that is, like I said, an EU regulation, which kind of manages this and then is totally independent from everyone. So it can't be biased then as well. It can't be influenced by just the biggest player in the market. Whereas this thing that you're saying could perhaps be influenced by, you know, the biggest players. Who knows? So I think an EU regulation would be much more effective in distribution of control.
Okay, and maybe my last question about the platform. You know that every crisis is an opportunity. Also, what is your opinion? How Bondora can benefit the current crisis, and is there any ideas that you leverage the opportunities that you will see in this crisis?
I mean, like I said earlier, I think one of the biggest opportunities for Bondora at the moment is to continue to deliver on what we've always promised we will deliver on throughout this period. Because I think investors appreciate and trust that more than, you know, some kind of new service which we could kind of latch onto at this point to our existing investor base. So for us to kind of continue to build that trust and deliver on what we said we're going to deliver on is the number one priority for us, and it will be. So after this period is over and things kind of go back to normal, lockdown is over and people go on with their normal lives, I think that we'll see a huge growth in investors and also investments at that point, because we'll say like, hey, we've done this like over the past 6 months, year, this is how we performed despite any external market forces. And I think that will give a lot of confidence to investors. And personally, I'm really excited to see the results of that.
Okay, thank you. This is all for me. And,
yeah, maybe I could ask you some questions if you have the time. Yeah.
Okay, I have.
So what do you think is the most important for investors in this time within P2P? So you've had some cases, like you said, where some other platforms have you know, had some financial difficulties, or, you know, investors have lost their money. For investors, what's the most important thing that you look for, especially now when you're joining a platform or trying it for the first time?
I think for investors, no matter when, the most important thing is trust. Actually, finance is a business of trust for me. So the most important thing personally for me is to see the reasonable promises from the platform. And the platform is to see how these promises can be really achieved. It is very important for me not to see promises that are not achievable, as this is the first priority. I never actually registered to platforms like Kuetzal and Envestio because I see that the promises they make are not sustainable. And the second most important thing, even it's not a second, it's equal importance for me, is the transparency. I need to know what happens with the money. And I need to know there will be some third party that can assure that this money goes to these loans. Because there are some platforms that will tell you, give us the money, we will give them to some originators, and we will not disclose this, and we will invest in loans. And my thinking is, okay, I'm in IT, actually. I run an IT company for 25 years. So I can make a platform for, let's say, 3 months and generate the fake loans from fake, let's say, originators that are not disclosed, and have some very good performance until the investors continue to pay the money. It will be scammed, but I was thinking that it's not very hard to achieve. And so for me, transparency is number one thing, and trust. And this trust for me is transparency plus promises that you can actually make. Because let's say it's very nicely stated in Bondora that the Go&Grow liquidity is never guaranteed. It's expected to be. And I tested. with very big amounts. I mean, more than 10K euro. And I get the money for several seconds usually, because I use Payseras and there is SEP instant. They will come in seconds after I requested this. Even in weekends and things like that, everything is automated and I like it. But I was very well aware that this will continue until there is positive cash flow to the platform. When they start to be negative, you can expect such liquidity. And this is, I know that this is the promise that I think it's very well stated, that it's conditional. I don't like, especially don't like the word guarantee in buybacks guarantee. I mean, on the patent stating, because guarantee, there is no guarantees in the finances and investing for me. There is only promises. And when this promise is backed by a very good balance sheet for the originator, it's okay. But when this promise is backed with highly leveraged originator doing some irresponsible, let's say, giving some loans that are not very well backed by credit risk and ratings, I don't see this as a good thing. So I really appreciate that Bondora has made the portfolio public, the whole portfolio of loans public. I also read a blog, it's a format that Bondora employ, as I call TAVI, that made some analysis that the data can be interpreted in a different way. I read this and I like that someone has the ability to check this data independently, which is very important for me. And also that Bondora is licensed in these countries to issue the loans. It's mean lots to me also, because it's not some kind of shady scheme. And maybe you said that this data are audited. Who is your auditor? Is it some big company or not?
Yes, so we've had it from KPMG.
Oh,
yeah,
nice. It's good to name the company, because KPMG is something different from some local company that can be connected actually to the owners. Okay, this is very important for me also.
And this is published on our site as well. You can see the actual reports, so our financial reports.
I actually never read financial reports, because I don't like them. Okay. I mean the IT business is mostly ERP implementations. We do ERP implementations, and we know that creative accounting, it's very possible to be done on very same data. You can have quite different results. So okay. I don't insist to read this, but I like to know that someone is signing off for them, that they are real. And the other reason that I don't read financial reports usually is because they looking backwards. I mean, sometimes 9 months, sometimes 12 months, sometimes even more backwards, and the financial situation can be changed dramatically in months, not in years. So, okay, they're an indicator for me, but it's good to know that KPMG is your auditor.
Sure. And just one more question from me. So, what changes, if any, have you made to your own portfolio overall? It doesn't have to be just within P2P, but your overall investment portfolio. What has changed?
I'm a little bit risk averse. I invested during the last crisis and know how to handle the risk. For me, return on capital is much more than return off capital. So I prefer to be conservative a little bit. I lower my stock market portfolio during the first weeks of January. I get rid of all the speculative stocks. I have some lot of stocks still in portfolio, but they are very stable companies. I called core holdings for me, and I don't have any plans to sell them. Maybe I will lower a little bit on all the market rebounds that are currently happened on the stock market. I have some real estate portfolio. I mean, real estate, and there will be no any changes in this area. Maybe in a couple of years there will be some additions, but currently no. And my P2P portfolio is currently almost not changed as a size. The one thing I used to do, but never do since January, and it's a good thing, was to have some quite large amounts in Bondora, park it in Bondora Go for let's say month or couple of months, just to find some better investment until finding some better investment opportunity. But currently I stopped to do this because liquidity is not guaranteed, and it was never actually, but I was pretty well aware that when everything's go up, they will be pretty, I expected to have some good liquidity. And I stopped auto investing portfolios on, especially on secondary market, like platforms like Mintos and things like that. I didn't withdraw the money. I just stopped auto investing because currently I don't see the point to use the auto investing. There are too many good opportunities. I had to do trading on the P2P platforms, but currently you have, it's not a good idea to have auto investing for me, because I prefer to cherry pick some deals that are very good one deals according to me, of course. Some panicked investors sell some good loans with 15, 20, even 30% discount.
Okay, you sound like you're
this
quite...
is not a stock. Yeah, it's kind of opportunity for me, and I didn't reduce the portfolio in P2P, and don't have any plans to do this currently. But I don't invest any new money in anything, and maybe this will be the situation for 3 to 6 months from now, okay. Because I think we will head to some pretty severe recession, and there will be deflation. I know a lot of people expect inflation, hyperinflation, things like that. I really expect deflation short term, at least 6 to 12 months from here. But this is my expectations, and I bet my own money. It's not some advice for anyone. This is the situation for me. Let's say
you can see that you've done your research and you have a thorough plan in place, which is great. So
I always do my research. I think the biggest mistake of investors is they don't have any research, and the even bigger one for this is they don't do any investment plan. What I will do if something changes? What is my investment plan? To buy this stock, if they go down 20%, I will sell it or not. And when I buy this stock or invest in this platform, what will I do? I think P2P have a very big problem with bloggers. I mean, irresponsible blogging is a very bad thing. I personally have a blog, and I never write about certain platforms. The only platform that I write about was, and I not very happy with this, was Groupier. I have some very small amount in this platform. Maybe actually for me they are lost, but in any case it's not anything that is really big deal for me. It's very small amount, and on my blog I have some certain let's say risk ratings on all platform, and the risk ratings for the Groupier review was 9 from 10. I mean, the riskiest one I ever wrote, and I encourage my readers to reread the review. It's never changed. I will not remove it from the web. I just put a very big warning not to invest in this platform, but the review will stay as is, because I want for them to read it one more time and see if there are any warnings inside, and how they how was their perception for these warnings before, and how is their perception for the warnings now. Because I think irresponsible bloggers are one part of the problem, but the other part of the problem are irresponsible readers. I mean, a lot of bloggers not very skilled, let's say, to say at least, in investing. I don't mean for P2P. And they are thinking that they will have some referrals stating their portfolio each month and saying that, oh, they are very happy with this platform, almost 3 months investing, very good results and things like that. I actually never write for a platform that I'm investing for less than a year. There is only one exception, but I stated very clearly why. So
yeah, I think it's a really important point that I think it's great that people are blogging their experiences, but it's ultimately up to the investor to make their decision and do their own risk assessment and due diligence and how to proceed. So you should always kind of do that rather than just taking someone else's word for it. You know, it's great that people share their experiences, but also make your own decisions as well and decide if it suits your portfolio.
The people, it's great to share the experience when you have a real track record. I don't see experience investing for 3 months or 6 months. It's not an experience. It's just a try. You can have an experience in, let's say, couple of years at best. And it's not guaranteed at all, but you will know a lot of more than the platform, what to expect, what their real drawbacks, and what is their advantages to the other platform. Let's say I have some, and the other big problem for me is calling P2P to very different platforms, very different lending models, very different business models. The P2P is not equal. Let's say when you say stock, there are different companies. There is penny stocks for some gold mining companies in Tanzania, let's say, that you can do any real due diligence. And there is some stocks like Apple or Microsoft, let's say. So this is same things with the P2P. When they say I'm not happy with the P2P because some platform, well, is they like saying that you are not happy with the stock market because let's say Enron or some investments come like Bernie Madoff.
Mm-hmm.
And the big problem is the people focused on returns, but not the risks. And maybe this will change for the next year. And,
yeah, I think because people may have been investing for a time when, for stocks especially, when it was just continuously up, and they've never kind of seen that downward spike in these investments. So, yeah, I think so too. But good, okay. So, shall I pause it there, or do you want to do an outro?
Sorry?
Shall I pause it there, or do you want to do like an ending thing or something?
I don't have any endings. I got everything that I asked all the questions I have for you, and pretty happy with the answers.
Yeah.
And if you have any further questions for me?
No, I think you've answered them really well, and I think it's good for investors to learn about your perspective of risk as well, not just from ours. So that was great.
Okay, thank you.
Yeah.
So thank you for this interview.
Yeah, thanks a lot, Stoicho. It's been good to talk to you today.
Me too.
Yeah.
Okay.
Take care.
Bye, and have a nice day. And go up.
Yeah, we will.
Okay.
Thank you.
Okay.